Yo, what's going on, guys? It's Ivan, the CEO, back with another video. I want to put y'all on game on how to structure a strong credit profile. Now, when it comes to having a strong credit profile, you're going to want to have two types of accounts: installments and revolving credit. Now, installments are pretty much just loans reporting to the credit bureaus, and revolving is going to be accounts like credit cards. So you need a pair of both. Both are very important so you can get pretty much approved for anything that it's a credit card, house, or a car. So those two are really important, and those are the two types of accounts that you need to have to build a strong credit profile. Now, before we go into detail on exactly what accounts I like to pretty much use to structure a credit profile, you're gonna want to keep one thing in mind: is credit takes time. It's not gonna come overnight. You're gonna have to let these accounts get some age added on. You're gonna want to make sure that these accounts report, and just give it time, because it ain't gonna come overnight. And building a strong credit profile definitely takes some time. I've been building mine for and really took me a while before I even really how to structure it. But just the more time that I've been in the credit space and just learning more as I go from mentors and all that, you just really take your time with the profile and make sure that you just have it structured properly with the right set of credit cards, because you could get some credit cards that aren't good. Like Credit One, Capital One. Capital One is not a good company. And I say this because it pulls from all three bureaus, and since we're barely starting out, I'm young. I'm 22 years old, so really since I'm barely starting out, I can't afford an inquiry across all three credit bureaus. So really, that's why I don't like Capital One. Capital One is going to be one of my last credit cards. The best credit cards for you to actually get are going to be a Chase starter credit card or Discover It. These two companies are going to be the best in the game for you to start building your credit, and for you to actually leverage these accounts and start building your credit to get into other, like the Apple credit card or the American Express Sky Miles, and even Preferred. There's so many credit cards that you can hop on to after having one of these first accounts established. And I really like Discover, because this credit card right here in specific switches out what you get. So these cashback cards are going to be your starters, and after that you can transition into point credit cards. So really, getting these credit cards on your profile will be really good for you. And that's really if you're barely going to start your credit. Now, if you already have a credit score but you don't really need credit cards and it's decent enough, we can go get you an unsecured line of credit with these credit cards, or I have to take the secured credit card route. Don't be scared to put some money into these cards. After 3 to 6 months, you pretty much gonna get triple, if not double, of what you invested into these cards. And not only that, they'll make it unsecured and you get your money back. Depends on the company. But if you're not gonna go with Discover, you gotta make with the credit union is gonna be top tier. If you're not messing with these banks outside of Chase, you're only out. Don't sleep on that. Run the credit union secured credit cards, Discover or Chase. One of those three. Don't even mess with it. It's gonna mess you up, especially because these banks, they're not as good when it comes to credit cards in terms of rewards and what they really offer for you. So start building those relationships early, like with Navy Federal, even RBF. You definitely need to go get an account open with them, the credit union, because not everybody can get accepted into Navy Federal. So it's one of those companies that so you can start having some revolving credit on your credit profile. Now, for one of the things you can do for installments, you can go get a Credit Strong or credit account, and both of those companies report as an installment loan to all three bureaus, and really it's just a monthly subscription. You see, I'm actually about to pull it up right now. Give me a second. But those companies, if you're not really trying to get a loan and you just really want to have that history added on there, good when it comes to installments, like an auto loan, even a house, or if you really do need a personal loan, you're really gonna want to open one of these accounts up. And this is what I recommend to all of my clients: to go open a Credit Strong or a self credit account. I can't stress this enough. It's a really good thing to do if you're not trying to get a loan, and just to get that installment history, those installment accounts report to your credit report. Let y'all on game. A lot of people in the credit space talk about these accounts, so I don't know why everybody's not on them. Accounts like Self Credit right here, those are what you're gonna want to get. Look, even rent reporters. If you want to report your own rent, Rental Karma, Rent Report, about them here. This is a good way to add history. That's what these two are for. Really just adding history, monthly payments and stuff like that. But you get to choose your own option of what you can afford. So if all you can do is $10, if all you can do is $20 a month, you can go ahead and open one up once. And this is really going to help it and just pretty much have an overall strong credit profile. So I really recommend it. Self Credit and Credit Strong. It's really good. Can't sleep on it. You see it right here. 45 to 86 points just for opening these accounts. And this really does help your score, your credit profile. So just make sure that you're not late, because these accounts will report the late payment if you don't pay for the monthly. So you need to make sure on there. But don't sleep on these accounts. They're ready to build your credit, to be honest with y'all. But that's because I've actually owned installment loans on there, reported to my bureaus, my profile. So I already have a strong credit profile. I didn't really need these, but I can honestly go and get one of these if I just want to add more history, more accounts. I currently have 8 accounts on my report, so that's actually pretty strong. So I really don't have to worry about having to add more accounts at the moment. But for y'all that are just starting building your credit, or if you have bad credit and you're trying to boost it, make a strong credit profile, this is definitely going to be the move for you. And really just getting up on these accounts, adding that age that these type of accounts really help. Now, how I just showed y'all, both of those accounts, Self Credit and Credit Strong, if you really want to take this to another level, if you open a secured credit card or an unsecured, you can have that credit card pay off for 2 accounts of it, Self Credit and Credit Strong. And this is how you put 3 accounts on your report easy. It's what I tell all my clients to do. Go get that credit card and make a subscription you can afford. If you want to spend $10-20 per subscription, it'll come out to $20 to $40 a month. And with those $20 to $40 a month, you'll have that reported to your credit bureaus, all 3. And it's going to help build accounts. It's going to add history. It's going to add age. It's going to have on-time payments with just $40 a month. And as long as you can pretty much afford that, with $40 a month, you can take care of 3 accounts on your credit report. And it's going to help you have a strong credit profile overall. And guys are sleeping on it, but that's really a big play that I be telling all my clients to get on. And that's honestly one of the best things you can do, to just invest in yourself and invest in your credit profile, because really that's going to help with your financial journey in the long run. And a lot of you guys sleep on credit, especially people that are young, my age. They just don't even care about credit, or they're not too big on it. But at some point or another, if you don't plan on buying everything cash, you need to start paying attention and just leverage your credit, because really that's how everybody gets by with everything around here in the United States. And in my opinion, you can really leverage that system that's put in place by the government to change your whole. Really, that's what I've done. I've leveraged my credit so much to pretty much establish multiple businesses throughout the years. I started at 20 years old with an 18-wheeler. So, I mean, imagine what you guys can do as well, just a strong credit profile. You know, a lot of people sleep on it, and really do as you want. So you can either go splurge with a car trying to fit in or whatever, or you can just go start a business. It's going to depend at the end of the day on how you leverage it, how you use your credit, but so much you can do with it. Don't sleep on it. Another thing that you're going to want is you're going to want to have as many accounts open as possible. So as soon as you start more accounts and you start adding some history, you got to wait around 3 to 4 months before you get your next credit card. But I strongly suggest for you to either credit card stack, which I'll make a video about that later on, how to credit card stack. But you also, so your first credit card should always be a cashback, a secured credit card. After that, you want to move up into these points credit cards, because these point credit cards are really good. And that's really where you just start moving up them in the credit space. And really my way of how I moved up. I started with a Discover credit card, and now Delta Sky Miles, American Express credit card. I got the Apple card just because I wanted it. I like how it's like a little metal card. I went out, I preferred just because that's really what I wanted next. My next credit card gonna be because they got that 424 rule, which is stupid, but I'll talk in another video. To these business credit cards, you can really see that right there. Hold on, give me a second. You see it, and I got more business credit cards, but this is my personal wallet right here, and really that's how you move up the ranks. Also having a good bank, because if you don't have a relationship with a good bank, you have IBC, I feel so sorry for you. Any bank does not, or Chase, Bank of America, you can get away with because they got those 4 auto loans, 1 inquiry, but outside of that, it's got to be Chase or a credit union. Don't sleep on that. Now you're going to history, build as quickly as possible. If you have access to getting added to a trade line from your parents, that they have a good standing, never late, just all the good things to pretty much report positive to your credit bureaus and your credit profile, the history is going to be 8 to 12 months. That's going to be the sweet spot, so you can pretty much look good on your credit profile. Now, if you only have, that's going to be a thin credit profile. It's not going to cut it. You can still get away with certain things, but it's going to be a little bit of a tougher time. So 8 to 12 months is going to be the sweet spot. So if you can have access to a trade line before you go and get approved for another credit card with a high limit, trying to buy a trade line that's age history, or getting added as an authorized user to either your parents, uncle, friend, someone that you know that's trusted. If you can get added authorized user to that account, that will really benefit you. And if you can stay on there, that will benefit you even longer. So, I mean, I really suggest to try to go family before you go out there and buy a trade line. But these trade lines, they're real good for you to pretty much add age history onto your credit profile. So age history is really important as well. Now, with everything we've gone over, you're going to want to make sure that you have the history, 8 to 12 months on history, and you're going to want to have revolving and installments. You're going to have both so that you can pretty much have a strong credit profile when you go ask for a business line of credit, higher tier credit cards like the Amex Gold, Amex Platinum, or even just point reward cards that are harder to get into. And just so you can pretty much get approved for whatever you want to go get, you know, a house, a car, what you're trying to go with a good credit score. You're going to want to make sure you have a strong credit profile to pretty much get these things. If your credit profile is thin, you're going to get denied every time. You can have 100 credit score, believe it or not, with just one, and you will get denied. You will get that higher interest rate. So having a strong credit profile is going to be key for you to pretty much get accepted for anything you want, and for you to pretty much have your way with credit. You know, a strong 680 is better than a weak 800 credit score. You know, I say that all the time, and really a lot of people head, but a credit score is the number. There's good and bad numbers, but it's how strong that credit profile is. You know, you can have a really strong 680, and your friend might have, he can go try to get a car and get denied because he don't have a strong credit profile. So we come down to a strong credit profile, and it's not just about the number, it's what's in that credit profile. And there you guys have it. That's how you structure a strong credit profile. Like and subscribe on the video. Follow me on Instagram, Valdez_enterprise. It's Ivan the CEO, back with another video. Follow me on the IG, subscribe, and I'm gonna be dropping way more videos coming soon. I'm actually gonna be dropping how I scaled car rental business partner Cam. Shout out my boy Cam. I'm gonna drop his IG right here below, and how we scaled the car rental business from 2 to 10 cars. Y'all stay tuned for that. But like I said, like and subscribe. It's your boy Ivan the CEO. I'm out.